If you've been a follower of this channel for a while, you'll know about Texas Roadhouse, a stock that I've followed for a long period of time. I've invested in the company myself, and so far it's been one of my biggest winners. I'm in the green on this one by around $28,000. Now, up until now, I may be one of the only ones that you associate with Texas Roadhouse, because up until now, not many people have been following this stock. It's a sit-down restaurant that doesn't seem like it would be a particularly great investment. It's a smaller market cap, so it's not one of the big companies that people talk about. It's not even in the S&P 500 yet. And it doesn't get much analyst coverage. There's not many analysts doing coverage on this. There's no Morningstar reports on it. It's a stock that's a little bit less followed. And so far, I think Texas Roadhouse is a sleeper stock. It is a great compounding machine with excellent fundamentals, with excellent management that has proven its resilience and business model for over a decade without much acknowledgement, without much credit where credit is due. When we look at this stock here, this is what the revenue looks like. This is not the revenue line of a bad company. It's growing continually above 10% per year for well over 20 years. 20 years of plus 10% growth. Even more impressive is the earnings per share growth of the company. Every single year, even during a recession, growing earnings per share. The only time where it was cut short was during a pandemic when they were literally closed. If you smooth out that pandemic, it's on track as usual. Now, I could continue on with the excellent balance sheet, the cash flows of the company, the same-store sales growth, the new locations they're opening up, and so on and so forth. But you get the point. Texas Roadhouse is not just a nice company. It's one that has excellent fundamentals. It's a compounding machine, which has been largely ignored by the media and social media until recently. Just recently, after the company's stock price surged 11%, the mainstream media decided to finally give the company its credit where credit is due. Instead of talking about all the big tech companies and all the fantastic large companies with great respect, they finally decide to talk about Texas Roadhouse. This company that has done so well, that's beat the market for such a long period of time. A stock that is going up in price because of their incredible performance in 2023 and a strong start to 2024. Now, do you think the media gave them credit as finally being a company to look at, one to consider, one that's worthy of examining their strong fundamentals and the reasons that this stock grew? Or do you think they just threw it in the basket of a meme stock, one that's going up for meme-ish reasons? Well, that's exactly what they did on this segment of CNBC. Let's go ahead and tune in here. This is a clip from the meme stock mania returning.
So let's talk about this so-called meme stock mania part 2, which kind of reminds us of the GameStop and AMC and Reddit, the dumb money days.
We have Reddit, GameStop, AMC, and dumb money. Let's go ahead and take a look at these stocks.
And get some historical context with not only Investopedia editor-in-chief Caleb Silver, but a gentleman who led our basketball team.
So this is the editor-in-chief of Investopedia. And so far, I like both of these people. I actually like Brian Sullivan. I think he's one of the more nice... I don't think he causes any issues. I think Brian Sullivan's fine. And I don't know the Investopedia editor-in-chief that well, but I like Investopedia as well. So far I'm looking at this and I'm thinking these seem like two knowledgeable, reasonable people. Let's go ahead and take a look at what they say here.
When we worked together to the New York Urban Professionals title, my man, I was terrible. And we worked together a lifetime ago during the first internet bubble. And that's kind of why I tried to post that picture. You guys have done a great job during all the meme stock stuff. Are you seeing any similarities between either one?
Yeah, some of them are bubbling up, unfortunately, which is maybe the irrational exuberance behind a lot of these stocks. Now, some of them have good stories. SMCI, their super microcomputer, they're making servers.
Here they put SWAT up at super microcomputers. You have Wingstop, Abercrombie & Fitch, and you have Texas Roadhouse there. This is the oddest basket of stocks I've ever seen put together. But what do they have in common? Look at the percentage gain this year. All of them are they're crushing it this year. They're doing really well beating the market. So they've plastered these four stocks together with their year-to-date performance.
Leaning heavily into AI, does that mean the stock should be where it is? The CEO now worth $7.8 billion, so big pullback today. Some of these others, though, sounds like a little bit of a return, not to the 90s, Brian, maybe the 80s. Roadhouse, a little Patrick Swayze going on there.
They're remaking that movie, by the way.
Absolutely.
With Jake Gyllenhaal.
Can't wait.
That's sacrilege.
Abercrombie & Fitch, that's very 80s. My teenage girls,
Huge shirtless models.
Baggy jerk. No, they've cleaned up their act.
That was in the 90s, though. That's what I'm trying to point out.
They're coming back. So a lot of this is that that, and as the great Jimmy Cliff would say, the harder they come, the harder they fall for some of these. And you just have to look back, not just to the 1990s.
Now see the way that they set this up, saying the harder they come, the harder they fall. Texas Roadhouse apparently is trading above where it deserves. It's traded up too fast, and to them that means that it must be a meme stock. Is it a company that just has fantastic fundamentals driving the performance of the company? Nope, it must be a meme stock. Let's go ahead and take a look at their reasoning for this company being a meme stock.
Yeah, what's interesting is they're not necessarily looking for fast money. So a lot of the money going into these stocks doesn't necessarily feel like that retail flood that we saw back in 2021. People are still being cautious, more optimistic than they've been in a long time, but also still looking to protect themselves because I think a lot of people don't necessarily believe the rally. Maybe the air's getting thin up here at these new higher highs because it has been driven by just a few stocks. So a cautious optimism, but usually you get that when things start to fall apart a little bit. And what we're seeing right now is a little drumbeat of this just might not hold up.
So there's no flood of retail money going into it. They say so far it's cautious optimism.
To your point earlier, Caleb, sorry, these are names that, in the meme stop, AMC, it's a movie theater chain, okay? But they were closed down.
It was a reopening trade. They bought a gold mine.
GameStop, a retailer some thought would go out of business. SMCI's got a huge business, a real business, to your point. NVIDIA loves them. Their servers apparently remain cooler. Texas Roadhouse, people tell me, is fantastic. They're packed every time. You got to get there at like 4 o'clock to eat by 6 o'clock. I mean, ANF, somebody's got to win the retail world. Not
Brian is right on Texas Roadhouse. If you've been to the restaurant, it's not an empty place. You're not going to go to Texas Roadhouse and find that the entire place is empty, especially if you go during dinner hours. It's usually going to be busy. On the weekends, it's going to be packed. They have a digital app that you can get in queue. Typically, the line is between a half hour to an hour and 40 minutes. That's typical. On weekends, it may be even longer. So you have to use the digital app to get into queue. So this isn't a restaurant that is trading up because investors want to pump a stock. The price of the stock is following the fundamentals. So what he's pointing out there is correct, but listen to where this goes.
So I do feel like this is a little different than 2 years ago.
It is, and there's other differences that are super important that your viewers should recognize here. Okay. These stocks are not necessarily heavily shorted. They are not on the top of the most shorted stocks list. That's interesting because back in 2020, 2021, there was a backlash against those short stops. These are not heavily hyped on Reddit. I was all over Wall Street Bets today. Not a lot of conversation around any of these stocks. Modest trading volume. We're not seeing a surge in trading volume, just a steady drumbeat higher. Now, higher than usual, especially as these stocks ascend, but it's nothing like we saw 3 years ago. And a lot of these, Brian, are heavily owned by institutions, institutional investors that a lot of us have our mutual funds with or our 401ks. Heavy institutional ownership here.
So just to summarize here, he importantly outlines that these companies are not heavily shorted like a typical meme stock, meaning that you're not battling some big bad hedge fund when you buy these stocks. You're not doing a short squeeze. They're also not heavily owned by retail. A lot of these companies are just owned by institutions. So you're not getting the mania of retail investors. And he even highlights that they're not popular on social media or Reddit, which is the melting pot of meme stocks. That is where meme stocks go, is through Reddit. So basically, he summarizes after their segment of highlighting Texas Roadhouse as a meme stock that it doesn't meet any of the definitions of a meme stock. It's not owned by retail. It's not hyped on Reddit. It doesn't have any big shorts against it. And it's mostly owned by institutions. Maybe, just maybe, Brian and Caleb Silver, Texas Roadhouse isn't a meme stock. Could that be the answer to this?
This is not a huge retail flood of traders trying to punt these stocks up and get out, but there might be some activity there, which is why you're seeing those extra percentages higher. The question is, how long can this last? And the first person out the door, it might be the person that's, makes that bag. The rest of the people are going to see what happened 3 years ago when these stocks fell out.
And he ends with that grim warning that these stocks are obviously pumped up too high. The first ones out will be the winners, and the ones that hold on to this are going to be the ones that feel the pain when these meme stocks like Texas Roadhouse implode. Now, obviously, there's a lot to go through here. There's a lot wrong in this interview to respond to. One of them being the definition of a meme stock. They seem to be under the impression that a meme stock is any stock that's going up in price. Any that's doing well is a meme stock now. No, the definition of a meme stock has always been a stock that has poor fundamentals, one that's in secular decline, one that's struggling, and has been pumped up by retail investors, has been popularized on social media, has many people betting and gambling on it, doing options, pushing the price up higher and higher, usually with some type of narrative behind it, fighting the big bad hedge funds. So typically they're also stocks that are heavily shorted. The reason that AMC was a meme stock is because the company has incredibly poor fundamentals. It was in secular decline. It is being beaten by streaming services, had negative cash flow, had record amounts of debt on the balance sheet, and investors were still pushing the stock up to record highs. That is a meme stock. That is not the same situation as a company like Texas Roadhouse. So in the same breath of them bucketing these two stocks together, they're creating a lot of confusion and, I believe, just misinformation for their viewers. Companies like Texas Roadhouse do not resemble a meme stock at all. Not even a little bit. Not even a pinch. The reason that Texas Roadhouse is going up in price is because the company's performing well. Fundamentally speaking, it's performing well. Even when we look at the valuation of Texas Roadhouse, we can look at the valuation today on a forward PE basis, and the valuation is perfectly in line with its 10-year historical average. Texas Roadhouse trades at a 25 forward PE, which is the same valuation it traded at in 2022, 2019, 2018, 2017, 2016, and 2015. There's nothing memeish about this valuation, nothing unusual about it at all. And the simple truth is that news organizations like CNBC, big news organizations that spend 5 seconds looking at a stock and seeing the price going up without checking out the fundamentals at all, are never going to give you a fair take at a company. They never will. And they'll never give companies, small ones like Texas Roadhouse, their due credit. Their credit off of incredible fundamentals and growth of their company. Instead, they basket them in with AMC and the hype that happened in 2021. So just know to do your own research. Don't trust other people, especially the mainstream media, and trust the numbers. The numbers do not lie. That's all for this episode. Hope you enjoyed. See you in the next one.